Good morning, good morning. It is 8:03 a.m. Chicago time, 9:03 Eastern on April 4th, 2017. It's a Tuesday, my favorite trading day of the week. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The first thing I want to announce is that I'm doing an AMA on April 19th for Futures IO. You will see that on Twitter and on my website. My website's currently down and it's being worked on, but there is a public AMA being held at Futures IO on April 19th, right after the close. Just want to make sure you knew about that. As far as what the markets are looking like from a sentiment point of view, I got a split down the middle. The minis took a hit overnight. The Nasdaq minis, that is, 19 and a half points down, 0.36. So trading at 45.15. Yesterday's close is around not 45, 54.15. The close yesterday was around 54.34, something like that. A fair gap down. I think I heard some news on Hewlett Packard getting hammered a little bit. Crude oil is the leader this morning, trading at 50.52 on the May 2017 contract, followed by gold, which has jumped up to 12.59 and 60 cents, up 0.45%. The rest are mixed. The S&P minis are down 7.25 points. We're taking back some of the rally we had yesterday afternoon on that V bottom that was made in the indices. The news flow overnight looks like the U.S. House of Representatives is working on another attempt at changing the health care bill. They're likely to propose a second one. Global debt hits an eye-watering 215 trillion. Current global debt is running at 325% of global GDP. That is very, very troublesome. And then other than that, the Bank of Australia kept rates at 1.5%, but has warned that household borrowing for housing purchases is outpacing household income. Look out for that. As far as the global markets, pretty much just slightly down, flat across the board. The DAX is down 0.12%, Euro Stoxx 0.1%, the CAC 40 0.12%, the Hang Seng is up 0.62%, and the yen dollar pair is trading down 0.38%. Not seeing any other news. There's the U.S. February trade balance came in slightly better, negative 43.6 versus negative 44.6, and Eurozone retail sales came in at 0.7, stronger than 0.5. As far as what we're expecting for the rest of the day here, we have several numbers at 10 o'clock. U.S. numbers. U.S. factory orders coming in February at 1%. Durable goods looking for 1.7%. And then we have ECB's Draghi speaking at 9:30, right at the cash open. And then at 4:30 this afternoon, right after the cash close, we're looking for Fed Speaker Tarullo to make some comments at Princeton University. Let's switch gears here and look at what we expected yesterday versus what we got. Yesterday, the first and second hypotheses did not work at all. So, no action there. There was a high expectation on my part that we would start to go higher after testing lower, given given what I explained yesterday, the weak high and the shape of the profile. But that didn't work at all for Hypo 1 or Hypo 2. What played out was Hypo 3, but Hypo 3 was, I didn't post it here, but Hypo 3 did not have an expectation of a return back to where we were. So pretty tough to predict this one. This is what actually happened in open auction. Uh, so the market just sat sideways at the open right there, and then it started to drop. And look at how beautiful this is. Just absolutely awesome. Pushback to mid yesterday's low, OS low, VWAP, lots of confluence there. This was the trade of the day right here. Short, looking for a continuation. The big target was 23.52. The extended target was 23.40, which should hit on the tick right here. Remember 23.40 from 2 weeks ago. It got there to the tick. And then from there, it just sat sideways. Lots and lots of balancing in this zone here, which moved, gave us for a while, provided for the point of control, which started up here. You can see this faint blue line. The point of control shifted down here, and then right at the close, it shifted up to where it was. We have a double distribution profile, pretty thin. We have what looks like a trending day, except that it's not, because it finished right in the IB. For a trend day to actually be a trend day, it cannot finish inside the IB. What is the IB? The IB is represented by these two lines here. The IB is the first hour's high and low, and the IB is the theory behind the IB is that most of the work done by the OTF or the higher time frame, the other time frame, the people who are trading higher time frames, is done within the first hour. You can see that in your volume histogram. If you do a volume histogram, an hourly, half hour, 15, you can see that it starts out high and then it starts to drop after the first hour into lunch, and it just stays low, and then it starts to rise again right at the closing range. So there's a lot of business being done at the close in terms of volume and at the open, and the IB captures what it expects to be the market on open all the way through to the early business of the day. Also, the IB is used as a way to measure the progress of the auction throughout the day. It's a measuring stick. Yesterday, we pushed to the point of control and just could not get above it. Remember, I talked about the LVN here at 23.62 and a quarter, and that's likely to present some resistance early on. And then beyond there, we would likely see resistance at the MC point of control up higher. So the MC point of control was for this region was 23.6475 up here. So this is what we've done. We've taken back a good portion of Tuesday's sell-off, and then we have pulled back. We've pulled back to this line right here, right? To the 23.40. This is the area we left behind that was poorly auctioned. You can see we stabilized right at it, right here. So yesterday we used the prior Tuesday as a template, the 28th, and the idea was if it drops below the 23.52 right here, then it's likely to push all the way through down to 23.4150, 23.40, and then the point of control is right down here where the market stopped. The point of control, as you see up here, right there, 23.40.50, and it pushed through by 2 ticks before bouncing back up, and that's a heck of a bounce. 16.5 points on the close. So as we extend this profile forward, we see that we're building the profile a little bit higher. The point of control does not shift until later in the session, and now the point of control has shifted, and we need to pay attention to what it does on a retest of this 23.47 now. So the point of control has shifted up from here to here. So we want to see what that behaves like as we approach it. We're at 23.48. I expect today to be fairly active open. and I'm looking for a strong move out of here. If the screen in front of you seems unclear, you need to hit the settings button at the bottom right of the video and set it to 1080p, 1080p to get the full resolution so that it's crystal clear for you. Anyway, so that's where we left things yesterday. If we look at this from the point of view of market profile here, we ended the one-time framing up on the daily. So we've been one-time framing up for several days. This whole last week, that has come to an end. We broke this. We broke this low, and now we appear to be wanting to one-time frame down. The market's showing the market's daily. The daily now is equal to the weekly time frame. So the weekly and the daily are now agreeing. We're likely to see a battle take place from here, and that'll be good for us because it's probably going to introduce some volatility. I think the VIX got up over 13 yesterday. So that's where we were. As far as what we're expecting this morning, as we look at the overnight session, pretty good volume, 174,000. The overnight session was pretty much channeling down all morning. This is all it's done all morning long, and you can see that the profile was well traded here, was well traded throughout. As the market chopped down, you could see there's activity from both sides. This volume would not exist unless both sides were interacting with each other. Um, uh, so this is what we're coming into. A lot of weakness coming into today's session. I expect a fair amount of resistance going back up as we push through. And so that's the context that we're bringing in. We're below the mid of the overnight session. We're at the point of control, and we have taken back. We've cut through the low volume node from yesterday's profile, and it looks fairly bearish coming into the morning session here. My hypotheses for this morning. So the expectation this morning, this is where we're opening. The expectation is for the market to open, look up, try to push through this low volume node, fail, find sellers. I'm looking for a failed retest there, find sellers and start to move towards yesterday's low and potentially push down into 2337. That will be my hypo 1. That's the big trade idea for the day. That's the main trade idea. So as the market pushes up this morning, what am I looking for? I'm going to turn to my order flow, and I'm going to and depth flow on the S5 bookmap, and I'm going to look for how good of a job are the buyers doing in taking on the selling liquidity in the market. In other words, if the selling continues to reload and the buying is aggressive, but the selling continues to reload, I'm going to play hypo 1, and I'm going to look for a rotation down into 2340 and potentially 2337. If the market opens and it starts to push up, and I see that the offer is thin and that the buyers are aggressive, I'm going to look for hypo 2. Hypo 2 is expected to open, test down into this 2347, get tangled up here, and then I'm going to look for a big rotation, which would be here. Big rotation, then a failed attempt at the low, and then a continuation trade. I'm going to look for 2355, pull back to the OS high or the IB, and then an attempt at 2359, 2360. Remember, 2360 has been key here. So 2360, expecting initial resistance the first time we get up there, and then I'm expecting it to finish in the middle of the range here. Hypo 2. So with that, same thing, opposite side. I'm looking for as the market drops? Is it being supported? In other words, are the bids holding steady? Are there icebergs working in the market? Again, you can use S5 Bookmap to see the icebergs. Are the icebergs reloading? Are the sellers kind of hitting and standing off, hitting and standing off? Are they hitting and then looking, and the numbers are getting more and more aggressive? If they are hitting and standing off, I'm looking for areas to lean against to get long in the order flow, and I'm looking for that big rotation up. And if I don't catch the big rotation up, then I'm looking for the pullback after that for a continuation move higher. And then I'll look for the plan to play out. Again, 23.55 is your first target on hypo 2. So I'll just stick with two hypos for now to keep things simple. Just as a review, because there's been a lot of movement here in the 10 years. Um, as they go higher, putting pressure on yield. The market has been stuck here since the elections. It's been stuck in this range between 122, the 122 and the 125 handle, and it's testing the high side of the most recent tops that it has put in. And so the market, this particular market, the 10 years, the US 10 years, are starting to look like they're breaking out of this tiny range, and it's likely that they're working their way to this major low volume node. This low volume node is at 126.14. This is what it looks like it is attempting to do. The election happened right over here, and we're starting to work our way out of this sideways range and pushing out of the balance. This has been an enormous balance area. The composite point of control is beneath us now. The composite point of control is at 123.16 and a half. And it's moving away. That's been trending away. It's one-time framing upwards, and it looks fairly strong. It looks like yields are under pressure currently. So this particular product has been moving very well. It's got a fair amount of liquidity, but again, it's a treasury, so it's a fundamental product, and it's highly dependent on policy and global economics versus what the underlying stocks are doing or whatever. But this is basically breaking out of this big range, and it's got a fair amount of volume. If you look at the composite, it's just suddenly right in the value area. It suddenly has a box in it. So you can see this box is the value area, and it just drops off very rapidly above and below the box. And what this is saying is that there was so little participation outside of this value area. Volume just drops off rapidly. Normally, we would get a gradual dissipation of volume or gradually decreasing participation as we move away from value, but this is more boxy, so it doesn't contain the energy that you would like to see for a quick move out. But again, if we zoom in here a little bit, let's get rid of these. If we zoom in here a little bit, you could see that it has the usual pattern: consolidation days, then a gap, right here, a gap, then a break, and now it's continuing its break higher. It's doing that consolidation, compression, and then break, compression, break, compression, break, and it's doing it to the upside. Look for the gap zone above and look for the composite LVN, as I mentioned, at 126.14. Very interesting movement in there. There's definitely some opportunity in there. Of course, opportunity comes with its own risks. Anyway, I'll leave you with those thoughts. Good luck today, and I'll catch you tomorrow. Don't forget about the AMA on April 16th. You'll see the link for that on my website, on Twitter, and if you're on the mailing list, then you'll get it there. If you're not, click on the description of the video and join the mailing list if you want to be notified. Take care.